Hi, good afternoon, everyone. Good morning, good afternoon, good evening, wherever you guys are. So I'm here in Singapore, so it's a good afternoon. Now, before I begin, I've already actually did a pre-AV check with my partner Andrea over at the FP site. But I also just want to sort of do a double confirmation that you guys can hear me loud and clear. You guys are able to see my slides and able to see me on the screen as well. More importantly, the slides and hear me clearly. So hi Zahid, hi. I suppose you are able to hear me. Hey Ben, wow, I haven't seen your name in a while, Ben, actually. All right, so thanks for the quick reply. Thanks, Lucas, right? And thanks, Andre, right? All right, so everything seems to be working out fine. All right, so let's hit the show on the road. Okay, so today we're going to be covering candlestick and chart reversal patterns. Okay, I'm not sure how many of you actually look at candlesticks, but just before while I wait for you guys to reply me, right, I just want to have a general view of how many here actually use candlesticks as part of your trader's toolkit, right? So you actually use candlesticks to identify trading opportunities. You actually use chart patterns to identify trading opportunities. So while the replies are coming in, okay, I'm just going to do a quick disclaimer. Right, understand that the information contained in this presentation is really intended for general advice and informational purposes only. It does not take into account your investment objectives, financial situation, or particular needs. Now, FP Markets has made every effort to ensure the accuracy of information at the date of this presentation, but FP Markets does not give any warranty or representation to the accuracy, reliability, or completeness of the information contained in this material. Having said that, it is my duty as your presenter to ensure that whatever I share with you guys, whatever I prepare, is correct at time of the presentation. All right, so there are quite a number of replies that are coming in. Okay, so if you guys are familiar with me, right, I do see some familiar and regular names in the room, okay? But for those of you who are new to my style of presentation, right, I don't have any Q&A at the end of the presentation, right? I like to keep things interactive. I like to keep things fluid. Okay, so if you guys have any questions along the way, feel free to ask them. I will do my best to reply you guys. Okay, if there are multiple questions of similar nature, I will group them together and reply them at the right moment. If there are questions that I do not understand, like what is the meaning of life, okay, I will do a Google check, and at the right time, I will get back to you guys. Okay, so with that, this really will be what we are covering, the agenda for today. Okay, we'll start off with reversals and breakouts. What is the difference, right, between a reversal and a breakout? Okay, and then after that, I'll go into the top single candlestick pattern. And then we move on to the top double candlestick pattern, and then finally we look at chart reversal, right? Ideally, what I want to do is at the end of this presentation, I want to be able to combine candlestick patterns together with chart reversal patterns to sort of help us identify, right, the best time for entry, okay, and confirmation of whether there really is going to be a breakout, whether there really is going to be a reversal. Okay, so back to the answers, right? A lot of you actually are using both candlestick and chart reversal patterns. Okay, so if you are already adept with it, right, I asked for your understanding. I hope this will serve as a good refresher of sorts. Right, for those of you who only use candlesticks, okay, I hope the chart reversal pattern section will be able to value add. All right, so let's move on to the first section of the day. Reversals and breakouts. Okay, just a quick feel again. Just gonna try to interact with you guys. Do any of you want to give it a try to figure out what is the difference between a reversal and a breakout? Okay, what is the difference between a reversal and a breakout? Okay, there are wrong answers, unfortunately, right? I like to say there are no wrong answers, just stupid questions, but there are wrong answers. Okay, so but not to worry, just give it a try. We learn, we grow together. And the answer is actually on the slide. Okay, so the difference, okay, All right, thanks a lot, Peter, for your reply. Reversal is a change of trend. Thanks, Zahid. Okay, so yes, the answer is right on the slide. Actually, I sort of gave it away. A reversal happens when price completely changes direction. Okay, and how do we identify when price has completely changed direction? Right, reversals are confirmed when price has retraced more than 100% of the move. Generally, that is what we see when it comes to retracement. Okay, so if you look over here on the slide, right, let's talk about bearish. I missed out the letter H. Okay, so it should be a bullish reversal, bearish reversal. Point one, for under the bearish reversal, this is our starting point, this is our ending point, right? I like to, if I may, I like to always paint this image of a person that's walking. So you're starting from point one and you're actually walking towards point two. Now, let's just say this person is me, right? And generally I can be quite forgetful. So at point one, I leave my house, okay, and then after that I get to the lift, right? And then after that at point two, I realize that I have left my house keys at home. Okay, so what I do is I actually have to retrace my steps and go all the way back to my home, right, which is at point one. Okay, now if I'm going to step back into my home, right, and then go into my room, right, I would have gone further than my starting point. All right, so I would be able to, instead of saying that I retrace my steps back to my home, I would have to say that I have changed my direction and I have actually gone all the way back into my home to collect my house keys. All right, so that is the idea. All right, so a reversal, okay, a reversal is not a retracement, right? Don't get it confused. Retracement, reversal. A retracement may not lead to a reversal, but a reversal would mean that there is definitely 100% retracement that has been done. Okay, so they're not the same thing. All right, so reversal and breakouts, reversal and retracement, don't get it confused. Okay, so now that we know about reversals, okay, the bullish reversal idea is the exact same thing, right? It's the opposite. Is the opposite of the bearish reversal. Now, okay, I have Ernest here saying that there is no audio, right? I'm hearing that the audio is dropping off. We just want to be clear that you guys can hear me. Okay, thanks once again, Peter, for the quick reply. Thanks, Lucas and Dave. Now, audio is good, Ernest. Let me just type to him since he's not able to hear me. Okay, so great, fantastic. No drama, right, Joyce? No drama. Okay, so the bullish reversal, as I mentioned, okay, is really just the opposite of the bearish reversal, right? So you start with at point one again, and prices are going downwards, right? Price is in a downtrend. For some metal, right, price could reach a strong support, whether it's a graphical support, a Fibonacci support level at point two. That is when price would bounce. Okay, and price bounce, and as long as price is anywhere between, you know, 0.1 and 2, is a retracement. But let's say price has bounced and has surpassed, okay, 0.1. Now that is when we say that there is a reversal that is confirmed. Okay, so a retracement can lead to a reversal, right? But a retracement may not necessarily be a reversal in and on its own. Okay, now let's move on. I hope this is clear for you guys. Why this is important is because reversals are really where we can try to catch, okay, the candlestick reversal patterns, the chart reversal patterns, which are very important. All right, a lot of times, okay, we can never catch the tops and bottoms 100% of the time, or even that accurately, but this candlestick reversal patterns and chart reversals can help us catch it pretty accurately. Okay, so let's move on. Okay, let's talk about a breakout. So what is a breakout? Okay, a breakout, right, is very straightforward. A breakout can happen in either direction. Okay, it happens most often after a consolidation or a chart pattern. All right, even in a retracement, we can still see breakouts happening. All right, so I'm just going to go back to the slide, to the reversal slide. Okay, you can see that price has actually moved in one direction and then it has reversed, okay, it has retraced at this point, at the point 1, okay, when it breaks out, right, that is when we confirm it breaks out and there's a candle close or chart pattern confirmation, right? That is when we confirm that there is a bearish breakout. Okay, the same thing can be said for a bullish breakout, right? Price start at point 1, it goes all the way down to point 2, okay, and then after that it retraces, right, at the point back to point 1, okay, we can only say that the bullish reversal is confirmed when there is a breakout. All right, now let me just erase this. Okay, when we are doing retracements, okay, all right, we can see breakouts as well. Okay, so you can see that if, let's say, this is a big push up, okay, so let's just take this as point 1 and point 2. Now we know that prices never ever move in a straight line, right? Prices generally, okay, moves in a zigzag manner. And every time there's a zigzag manner, it's when we see a consolidation. And after a consolidation, we tend to see a breakout, right? So if price is starting at point 1, it goes to point 2, it moves in a zigzag manner. We can see on the microstructure of the market, right, that there tends to be a breakout. Okay, so I have a question here from Michelle asking about reversal. What time frame is it that I normally use, and if I can comment on BABA and MA. Okay, I'm not sure, is MA a stock counter? Okay, so yes, my colleague Benson really fast. MA MasterCard apparently. Okay, so is it already showing a reversal sign? So yes, Michelle, I will get to those two, BABA and MA. Okay, and then I will show whether we can spot any reversals on it. All right, so back to the breakout slide. That is ideally how we define a breakout. Okay, breakouts can happen in either direction, right? And it happens most often after a consolidation or during a chart pattern. It can also happen in the middle of the move. All right, I hope you guys are clear on this so far. Okay, with that, let's move on to the second section. Okay, now it's going to be a bit tough for me to talk about the top candlestick pattern, right? Because it's really subjective. Some candlestick patterns that work for me may not necessarily work for you. Okay, so I struggle to actually title these sections, but I thought, you know, for in terms of naming convention, I'll just put top single candlestick patterns. Okay, so for this section, we're going to look at candlestick patterns that only use one candlestick. All right, so an example over here, which I think works really well, is actually the hammer, right? The hammer patterns, and hammer patterns can be defined by having a small real body coupled with a long lower shadow. Okay, so you can see that it doesn't matter whether it's green or red in color, right? Ideally, the body is small. Okay, the body is small, and then you have a very long shadow. Okay, it can even look like that. Okay, it can look a bit, okay, not to be confused with the dragonfly doji, right? But it sometimes may come across as like a dragonfly doji. All right, so that is essentially a hammer pattern. Now over here it also says the lower shadow should be at least 2 times the height of the real body. Now that is theoretically speaking. Real life, we don't always see that happen. Okay, so I'm just going to use some charts as examples. Let's move over to the charts, and using Michelle's request, let's take a look at BABA. Okay, so for BABA, right, let's look at the monthly chart and see whether there are any reversal patterns. Okay, now one thing that you guys need to know about reversal patterns, okay, the very, very key information is that, okay, I'm just going to put it here. I'm going to increase the text size. It has to be very important for you guys to remember this. Okay. Okay, so reversal patterns, whether they are candlestick reversal patterns or chart reversal patterns, right? They have to happen at the end of a trend. Okay. So if you see something like that, if you see price sort of move in this manner, okay, just turn on. let's say you see price move in this manner, going upwards, right? And then after that, you see a double top, seemingly double top, and then it continues upwards. This is not, okay, this is not a double top reversal, all right? A double top reversal has to happen right at the top of a trend, okay? Or it's the same thing that can be said for a double bottom reversal pattern, okay? It has to happen at the bottom of a trend. So looking at BABA over here, looking with for at the tops and bottoms, right? There's a bottom right here. There's a swing high here, swing low here, swing high here, right? Looking at all these areas, we don't see any hammer patterns on the monthly, all right? On the monthly, we don't see anything. Not to worry, let's just go down to the lower time frame. Let's try to identify the highs and the lows. Okay, so over here, right, we have price sort of trending lower. Let me just change the color of this so it's easier to see. Right, we have price trending lower. And if I were to zoom into this area here, you can almost immediately see that there is actually a hammer pattern, right? Now, a hammer pattern happens at the end of the trend, okay? Of course, ideally, it should be the first candle that signals the reversal, right? But like I said, in theory and in real life, they're often very different, okay? But we see the hammer pattern being the second pattern, second candlestick at the bottom of a downtrend. And after this hammer pattern is formed, right, we see price for BABA on the weekly make a continuous push all the way up. All right, so that is essentially how we can use candlestick patterns, right, to look for reversals. Okay, so I'm just going to scroll a bit further back and just look at the swing high, swing lows. Okay, so on BABA, this seems to be the only pattern, the only hammer pattern that I can find. Okay, okay, Margaret is asking, are we supposed to be able to see the charts on the screens? Yeah, Margaret, you should be able to see me drawing right now. Are the rest of you able to see me drawing on the charts? Pretty blue and red candles. Okay, so the rest are able to see. So Margaret, if you're unable to see it, okay, great. Okay, so you can see it now. All right, so that's BABA. Let's move on to MasterCard. Okay, again, we can start off with the big time frame, right? I just like to look at a big time frame because the candlestick patterns are actually clear over there. Unfortunately, not so for MasterCard. Weekly, looking at the swing highs and swing lows. Okay, you don't really see any candlestick reversal patterns, the hammer. Okay, let's move on to the daily. Okay, so I'm just looking for the trend, right? The uptrend and the downtrend. Okay, so you can see that at the start, this is actually a trend, right? Prices are going all the way up, and you actually see this, what looks like a hammer, right? Okay, so a hammer happens at the bottom of a trend. Okay, a hammer happens at the bottom of a trend. When it happens at the top of a trend, right, it is called a hanging man. I think it's called a hanging man. Okay, let me just double confirm that. Okay, yes, so this is a hanging man pattern, right? It should occur at the top of a trend. All right, so if I were to zoom in over here for MasterCard, we can see very clearly on the daily that after price has done a very strong push higher, right, we have a hanging man, which is essentially a hammer pattern at the top of the trend. All right, followed by the second session where price actually dropped lower, and then the third session we had a very strong gap lower, right? So this is sort of a signal to tell you, right, that price is going to start reversing now, and we should actually look out for this. Okay, so I'm just trying to see whether recently there's, okay, now we have another strong trend downwards, right, into something that looks like a hammer. Okay, this for me is still acceptable as a hammer. Why? Because the shadow, right, going back to this, the theoretical definition, okay, the shadow should be at least 2 times the height of the real body, and the close ideally, okay, is near the open. right? It just doesn't happen right at the top of the candlestick. It happens slightly below the top. So let's go back to the chart. You can see this also can be considered for me a hammer. All right, so it does work, but as with all reversal patterns, there tends to be a bit of a hindsight bias to it. Okay, so let me just move on from the hammer. Prakash, I see your question on gold. All right, I will use gold as an example later on as well. All right, Alex, what time frame do I use to identify the reversal? Daily, weekly, monthly, or combo? Or depends on how you trade, right? So fantastic question. Your question covered all grounds, right? For me, the way that I identify the reversal, okay, I have to start with a top-down approach, right? I try to look for where the key reversals are, okay, on a bigger time frame, and then I confirm it on a lower time frame by looking for candlestick reversal patterns or chart reversal patterns. All right. I want to try to cover sections 3 and 4, and then I want to try to fast forward into doing it on analysis so that you guys can really see how best to apply this skill. Okay, so let's move on from the hammer. Okay, and now we'll move on to the double candlestick pattern. Now, one of my favorite double candlestick pattern is actually the engulfing candle pattern. Okay, I really think that when this sort of pattern formation happens, especially at the top, again, you need a preceding trend, right? You always need a preceding trend for reversal patterns. Now, when bullish or bearish engulfing patterns happens at the top of a trend or at the bottom of a trend, I think they're actually one of the most powerful signals that the market is giving us. Okay, so reversal pattern where the second candle, okay, as you can see over here, right, this is the first candle. Let me just change the color. Okay, first candle, second candle. All right, so it's a 2 candlestick pattern. First candle, second candle. All right, so we're bullish engulfing, bearish engulfing. Now, the reversal pattern happens when the second candle engulfs the real body of the previous candle. Okay, so as long as the second body, you can, if it's hard for you guys to see, you can just draw lines across. Okay, as long as the second body is much bigger than the first body, right? Than candlestick one's first body. Okay, for me that is still possible as an engulfing. Okay, because in the FX market is very fluid, right? Sometimes the body will cover the entire wick, sometimes it doesn't. Okay, now this is seen more often in the stock market, right? It's a lot more clearly and easily defined in the stock market, right? But in the FX market, when prices are so fluid, the open of one session will be the close of the previous session. Okay, so that is why bullish engulfing rules for the FX markets can generally be a bit more relaxed. Okay, so Michael, you're asking, I'm using closed bodies, is it the same if the body is open? I'm not sure what you are trying to refer to when you say that I'm using closed bodies. Okay, when we're talking about candlestick charts, right, we actually have open, high, low, close prices on the candlestick. Maybe if you can explain your question in another way, I'll try to understand it and see whether we can be on the same page of understanding, and then I'll give you hopefully a more clear reply. Okay, so while waiting for Michael to type in his clarification, right, this is an engulfing pattern. Again, it has to happen at the end of a trend, whether it's the top of the uptrend or at the bottom of a downtrend. Let's quickly run over to the charts and just take a quick look. Okay, so engulfing and bearish engulfing, right? Now let's use Rakesh request for gold. Okay, now I've always been starting on a monthly, on a weekly, on a daily. Okay, now on a daily, I immediately already see a bearish engulfing, very clear. All right, again, it requires a bit of hindsight bias, right? Just want to show you guys examples, so I'm going to be a bit selective about this. All right, we see price made a low here as recent in April. Okay, and then there's a very strong uptrend. It pushes all the way to the top. Right, finally at the top we see a very strong bearish engulfing. It's a very strong bearish engulfing. This bearish engulfing actually covered 1, 2, 3, 4, 5, 6, 7, 8, 9, 9 sessions, right? It covered the 9 previous session. All right, hi Daniel. I haven't seen your name in a while, all right, but thanks for joining me. Okay, so this bearish engulfing covered the 9 previous session, meaning what it means is that we're on the daily. What it really means is that, you know, for 9 consecutive days where prices were pushing upwards, all you needed was 1 day to erase the entire gains made by the 9 preceding days. So this is actually a very strong signal, right? And it's not just looking at candlestick patterns, but it's also understanding the psychology, the reasoning behind these patterns, right? So this bearish engulfing candle erased 9 straight days of gains. Of course, this is just telling you that, hey, you know, it's going to be a very strong signal for reversal. Look what happened. Price tanked almost immediately, right? So price tanked all the way to the bottom, right? We can even go down to the 1 hour, and this story is going to repeat itself a couple of times, right? So let me just try to see an example. We're going to have the power of hindsight now. Okay, so not the best, but you can see that when price was actually in a consolidation, right? Every time after a pullback, right? Every time after a retracement, I'll not say it's a reversal, right? Because a reversal, we have to break past the start of point 1. But you can see that when there's a retracement followed by a bullish engulfing, right? Prices go all the way up. Likewise, okay, it goes all the way down to here. You see, there's one strong push down, followed by a bullish engulfing. We start seeing prices going higher again. And finally, one more time, again, another retracement, go all the way down, followed by a bullish engulfing, right? This bullish engulfing covered the past 3 sessions, erase all the losses of the past 3 sessions, right? That was when we start seeing a very strong push up. All right, so that is how we can actually go in onto the lower time frame, right? All these candlestick patterns work on every time frame, all right? But there is a way that I hope to share with you guys that can actually confirm or help you better confirm that a reversal is happening. Okay, a reversal is happening, right? Or a breakout might be happening. Okay, so I've shown you guys from monthly, I've shown you guys on weekly, daily, I've even gone down to the 1 hour. Clearly, candlestick patterns can work on all these time frames. All right, are you guys clear so far? Any questions on the single candlestick patterns like hammer, or double candlestick patterns like engulfing? Right, these are really my 2 favorite patterns. Okay, so actually the section should be titled Isaac's favorite single candlestick pattern or Isaac's favorite double candlestick pattern. Okay, Alan, you're asking, do I take volume into account? Right, now this is a very tricky question. Okay, volume is something, okay, volume is something that is not very effective on the FX markets. Okay, it generally is more effective on the equity side of things, but not very effective on the FX markets. Why? On the equity sides, very quickly, right? I don't want to waste too much time with this, but on the equity sides, all volume is actually matched and checked through a centralized exchange. Right? Buyers and sellers meet at an exchange, they trade, that volume is reported as open data for everybody to know. Right? However, in the FX market is an interbank market, right? What one bank does, what one bank trades with another bank, the other banks are not privy to such information. So it's very hard to determine volume, okay, when it comes to the FX markets. So unfortunately, when I look at when I do chart analysis, I tend not to look at volume at all. All right, so Alan, I hope that answers your question. Moving on to Lucas's question. So candle patterns hint of reversals, but we still need to wait for more than 100% to more than 100 to confirm. I guess what you're talking about is waiting for the reversal to confirm. Yes, Lucas, generally, like I said earlier, okay, reversal patterns, nobody can catch it right at the top or at the bottom, okay? But reversal patterns tend to help us confirm, okay, that these reversals have taken place, are taking place, and that helps us to position ourselves better. So it requires a bit of waiting as well. And Daniel, back over to your question as well. I mentioned that I only look at this on a daily or weekly for strong pattern. Yes, generally that's what I do, right? I like to look towards the end of the day, all right? Or if I'm looking on a daily chart, I like to look at the start of the how do I say? Let's say today, right? I like to look at how the candle yesterday closed. Okay, if it's at the bottom of a trend and there's a bullish engulfing, then for me, I would tell myself that ideally we should see up day. Okay, where you know prices are reversing. All right, it's even more powerful if it's on the monthly time frame, right? And then you see a bearish engulfing. Okay, let's go back to BABA. I saw an engulfing pattern just now on BABA on the monthly. So you can see, right, on the monthly right here. Okay, now this was November 2020, right? After the strong uptrend, okay, price makes a bearish engulfing, and this bearish engulfing, okay, completely erased the previous 2 months of gains, right? So at the start of December, I would already pretty much tell myself that, hey, you know, last month, November, we ended with a bearish engulfing. December could possibly be pretty bearish as well. So in a very ideal world, being able to take the entire bearish trade for December, right? You would actually have added 22% of gains to your portfolio, right? Just based on BABA alone. Okay, I'm saying in an ideal world, right? Just want to give you guys a perfect example. Of course, nobody ever catches it at the top, nobody ever catches it at the bottom. If I'm able to catch this bearish engulfing right at the top, instead of 22%, I would have added 32% instead. Okay, so it's just a sort of a visual aid for you guys to see. All right, so Daniel, to answer your question, generally reversal patterns happen. Reversal patterns are stronger on the bigger time frame, right? But having said that, okay, I like to toggle through the different time frames to sort of get a better feel of things. Okay, so Daniel, I hope that answers your question. Right, thanks a lot, Ben, for telling me you're all clear. Now, finally, let's move on to the last section, all right, which is really chart reversal patterns. Now, there are a couple of chart reversal patterns that I really like, all right, but the next two that I share with you guys is really going to be some of the more common ones. All right, so it's common. I know you guys will probably know it already, but using it is a different thing altogether. Okay, so let's look at the first chart reversal pattern. Again, back to my first point. All reversal patterns have to happen at the end of a trend. Okay, so what we're going to look here is the double top, double bottom chart reversal pattern. Now, the pattern is confirmed when there's a candle close below the neckline. Okay, so you can see on my drawing over here, my very, very, very artistic drawing. Okay, right? So you see that price is on an uptrend, a general uptrend. Let me change my color. Okay, price is on a general uptrend. It goes into a double top, right? But what happens? Okay, it's not a double top until the neckline, this is the neckline, is broken, right? When the neckline is broken, it tells me that, hey, you know, a double top pattern most likely is going to form. But that does not mean that I immediately enter, right? Like I shared with you guys earlier, it's a wait and see, right? So what I do is I like to wait for price to do a pullback to retest the neckline. And the moment there's a rejection of this level, okay, it is an opportunity to go for short. All right, the opposite is the same for a double bottom. Okay, price is on a downtrend. Okay, it goes into sort of a double bottom, but this is not confirmed until price breaks out of the neckline. Okay, and then I don't enter immediately. I wait for a retest, and then upon a confirmation of a rejection, okay, I can go long. Right, so I never ever catch it at the bottom, right? I'll never be able to catch it at the bottom, but I can catch it pretty close to the bottom. All right, so that is how we look for double tops, double bottoms. Okay, so I'm just going to cover the next pattern first before I put it onto the chart for you guys to see. All right, so the next pattern that I'm going to share with you guys, also a very common pattern, is inverse head and shoulders, right? So likewise, again, it happens at the end of a trend. and the pattern is confirmed again when there is a close, okay, below the neckline. So same thing, head and shoulders. Okay, price is on an upwards trend, goes into a left shoulder, forms a higher high, goes into a head, forms a lower high, goes in a right shoulder. Now this just tells me that, you know, a possible head and shoulder pattern could be forming. And then finally price breaks below the neckline. It tells me that yes, it seems like a head and shoulders is confirmed, but what I need is a retest of the neckline and a confirmation of a rejection, and then I will go short. All right, the opposite is true for inverse head and shoulders. You have a downtrend, price goes into a left shoulder, makes a lower low, goes into a head, makes a higher low. That's your right shoulder, but there's no confirmation yet until the neckline is broken. And then I don't enter it immediately. I wait for a pullback, a retest of the neckline, followed by a rejection, and then that is when I enter and go long. Okay, so that is how we play the head and shoulders pattern. It's the same as the double top, double bottom. All right, just a bit more weighting. So Zahid, you're asking for 2 candles reversal pattern. When is it? When it is confirmed like neckline for double top, double bottom. Okay, so you're asking for confirmation of the 2 candlestick reversal pattern. Generally, okay, looking for patterns alone will never work. All right, of course we have to take all that into account. It has to be taken, a chart analysis has to be done coherently, right? So everything has to be taken into account. Normally for candle reversal pattern, right, what we like to see is a break, okay, a break of support or resistance, right? So a strong support resistance broken, coupled with whether it's a hammer or bullish engulfing, bearish engulfing, right? That is what we like to see. Okay. Okay, Daniel, you're asking, when it goes back to a neckline, do I go to a lower time frame to see an early development occurring and then take the trade? Yes, you're actually quite getting the idea there, right? That's why I say I like to toggle between the time frames, okay? Because time frame is something that is very important. All right, as an example will be, let's say you want to get from, okay, I want to get from Singapore to UK, right? And the UK is my final destination, okay? But of course, taking a plane is one thing, right? But let's say I want to do a road trip, okay? I need to plan along the way, right? I need to be sure, okay, every time while I'm traveling all the way to where I'm driving to the UK, every now and then I need to check my fuel, I need to check my tire pressure, I need to ensure that I have enough food for the journey, right? So it's always switching between all these factors to ensure that everything is still in line before finally being able to take the trade. Okay, so that's the best sort of imagery that I can paint for you. All right, so Daniel, I hope that answers your question. Okay, so we have a good 15 to 20 minutes, right, to go through the charts and just share with you guys what I've covered so far. So I hope to be able to value add, and let's do that right now. Okay, so back to, give me a moment. Okay, so let's take a look at Baba first, right? Okay, let's take a look at Baba. Let me go down the request that you guys had. Okay, so Michelle actually requested for Baba and MasterCard. Now, this requires a bit of hindsight, all right? So I want to focus on the more recent prices. I don't want to look too far back. Doesn't really bother me, right? Let's say price has made a high over here. Okay, price has actually made a high over here. Let me just change the settings. Okay, price has made a high here. Now, and then there's okay, given that now we know that this is a strong bearish engulfing. Okay, Bertha, you're asking for FX. Yes, of course we can do FX as well. Bertha, why not you put in a request for any FX pair, and I'll take a look at that with regards to today's topic on reversal patterns, right? And we go through that together. Okay. So imagine that we are back in November 2020 and the bearish candlestick is forming, right? The bearish engulfing candlestick is forming. How do I know for sure that this is a strong reversal, right? So my habit is I normally draw a zone around the highest high, the high point, Okay, and then I work my way down. Okay, so generally if I'm on the weekly, I can just jump down to the daily, right, and just look at this area and try to look for a chart reversal pattern. Okay, if it's hard to see in candlesticks, okay, you can always change it to line chart. So line chart is a bit tough to see as well in this area, right? So let's go down to the 4-hour time frame. Okay, the 4-hour time frame, slightly clearer now, slightly clearer, right? A bit messy, but still slightly clearer. And then I'll toggle between candlestick. Okay, I'll toggle between candlestick and line chart to see whether I am able to spot any pattern. Now, this is a bit tricky, okay, because if I include the spikes, I would actually consider this as like a triple top reversal pattern. Of course, there's an unnatural spike where the body just shot all the way up before a strong reversal, but you can already nearly immediately see, if I were to zoom in on the 1-hour, on the 4-hour, that taking the price action into consideration, this is a very strong uptrend, right? And what happens at the end of trend? You see that there is already a candlestick reversal pattern over here. All right, this is an inverted hammer if it happens at the bottom of a trend. All right, but if it happens at the top of a trend, it is, I believe it's called a shooting star, right? I believe it's called a shooting star. Okay, so we already have on the 4-hour, we can see that there is a shooting star pattern followed by a bearish gap. Okay, so this will tell me that, hey, you know, Isaac, these two clues, right? If let's say I'm trading on the monthly time frame, on the 4-hour time frame, I already have two clues to tell me that, hey, a reversal is sort of happening, right? A reversal is sort of happening. Okay, so if the 4-hour is still not clear enough for you, not an issue. Let's go down to the 1-hour and try to see whether there are any reversal patterns here. Okay, unfortunately on the 1-hour we are not able to see any real patterns. Okay, even in the line chart, right? There are no real patterns on the 1-hour. It seems like the reversal pattern is actually found on the 4-hour instead. Okay, some of you will argue and say that, hey Isaac, I see a very strong push up leading into sort of a double top, right? Can this be considered a double top? I would say no. Okay, this is too small to be considered a double top. All right, this is too small to be considered a double top. A stronger reversal pattern for me would actually be on the 4-hour, where I actually have a shooting star pattern followed by a bearish gap, right? And what can I do? Right, I can actually enter, right, on a breakout of this pattern, right, on a breakout, right? So what I can wait for is I can actually draw an entry. All right, this can be my sell entry followed by my stop loss. So a breakout followed by my stop loss. So once price has broken out very strongly, okay, right, somewhere over here, I can enter for a short. Okay, so I will never be able to catch it right at the top, but pretty close. All right, pretty close. Okay, so this is an example for BABA, right? So right now, if using the same idea, let's go to what's happening right now. So let's say price has come all the way down to a low, right? And I look for graphical support levels. Let's say there really is a strong graphical support level around here, but of course, ideally, I'll prefer it to be this low, but not an issue. If I think price is doing a reversal here, okay, all I have to do is draw a zone around this area. Okay, go down to the lower time frame. This is a daily, right? We can actually just zoom in. All right, if it's hard to see, but there's already a reversal pattern here. I'm not sure whether you guys can see this reversal pattern. Are you guys able to see this reversal pattern? It's quite clear on the daily. Why don't I just test you guys? Okay, some of you are saying it's a double bottom. Some of you have actually spotted a hammer. Very good. All right, so double bottom, if you change into close, fantastic, right? It's a very clear double bottom, but it's not the best breakout of the double bottom neckline, right? What I like to see for a double bottom neckline is something like that. Remember, I like to say, you know, we wait for a clear breakout, a retest, and then a confirmation of a rejection, then we enter, right? However, this is not a clear breakout. What is clearer is actually that there's a hammer followed by a bullish gap. Okay, price covered back the bullish gap, and then after that it goes higher. Okay, yeah, so Andrew, you're right, there's an abandoned baby, right? Right here. Okay, so fantastic, right? We already have a lot of patterns. Okay, if you want to go down to a low time frame, even on a 1 hour, I believe you are able to see something as well. Okay, so I'm just trying to see whether we can see any patterns on a 1 hour. So on the lowest of the lowest point, we are unable to see any reversal patterns. Okay, but if you want to be a bit more relaxed about it, I like to look for reversal patterns on the lowest point, right? But price did come back down and we see a bullish engulfing over here. Okay, so normally if this is a double bottom, all right guys, if this is a double bottom, if as some of you have rightly pointed out, this is a possible double bottom. Now when there is a breakout of the double bottom neckline, okay, and then when we do a retest coupled with a rejection, okay, for the rejection I would like to see a engulfing candle, or I would like to see a reversal candle such as a hammer. Why? Remember, this is still a small retracement, right? This is not a reversal, but it's still a small retracement to retest the neckline. All right, so when we confirm it with a reversal pattern, okay, this can still help us get in on the trade. All right, so BABA looks like it's going to go higher, okay, based on the daily, where we actually have this hammer pattern where the price gapped up and covered the gap. Okay, so we could see price push higher. There is also a possible double bottom pattern forming, could lead into a triple bottom, but this is what it is for now. All right, let's move on to MasterCard. Okay, we can start off with the monthly. Okay, monthly, again, we see last month candle, right, happened right at the top of a trend. What is this candle? Very clear, right? It's a bearish engulfing. Okay, and if you want to confirm whether this bearish engulfing is really valid, just draw a zone above the high, go down into the lower time frame. Okay, and look for reversal candlestick patterns, right? Immediately you can really see there is a bearish engulfing here, followed by a gap down, price pushed back up, okay, but nothing is certain, right? And then after that it push lower. Okay, so in line chart, you probably cannot see any real double top or triple top pattern. Okay, if you go down to a lower time frame on a 4 hour, okay, you do see a hanging man pattern happen right over here. All right, so that the daily, the 4 hour confirms that, you know, we do have a reversal pattern over here, right? That's why price is pushing all the way down. Okay, so we don't just take candlestick patterns and chart reversal patterns on its own, right? We couple them together with support resistance level, Fibonacci levels, right? And you can see that, you know, MasterCard looks like it could be doing a pretty big drop. Okay, it broke the 23.6. The next target for MasterCard on the long term could very well be the 61.8 Fibonacci retracement level, in line with the last graphical low over here. Okay, at the 312.38 level. Okay, now let's move on to gold. So gold on the monthly, we don't see anything. No reversal patterns whatsoever, right? So we can skip this. We can go down to the weekly. Now on the weekly, we see, you know, this is not really considered the top of a trend, right? So there is also no reversal pattern here. But whether price is really going to drop lower, it looks like, you know, this current week so far, we could be seeing a bearish engulfing. Okay, so I'm just going to draw a box around the high. Okay, and let's go down to the lower time frames. Okay, do we have any reversal patterns here? Unable to see any. Let's go down even lower on a 4 hour. Any reversal patterns in line chart, in candlestick? We're unable to see any reversal patterns as well. This I will not consider a bearish engulfing, because like what I say, a bearish engulfing has to happen at the top, okay, of a trend, right? So 4 hour nothing, 1 hour nothing. right? On the 1 hour, we don't see any reversal patterns as well. Okay, so because there is a lack of reversal patterns, right? Let's go back to the weekly, right? And this is really only the start of the trading week. You know, price may very well actually continue on its push higher, right? Price may very well continue on its push higher. So I'm just saying, you take all these things into consideration, right? There's a less chance of a reversal for gold this week, right? And it looks like, you know, right now this drop could be, you know, people closing out positions from over the weekends or from yesterday, right? Or they just see a short-term opportunity to go short. All right, so that's for gold. Okay, and let's move on to Bertha's request. Okay, Aussie dollar on an FX pair. Okay, Aussie dollar, right? Let's start off with the monthly. Now the monthly, okay, we actually had a bearish engulfing recently, right? Very strong uptrend. I see a very strong uptrend, and then price sort of traded sideways. Okay, formed a shooting star pattern, followed by a bearish engulfing, and it seems to be going lower. So is there any reversal pattern in this zone? All you have to do is go down to a lower time frame. Okay, no reversal patterns here that we see on the weekly. Even in line chart, a bit hard to see, right? Let's go down to the daily. Okay, on the daily, we do actually have a bearish engulfing, right? A very clear bearish engulfing. Price pushed all the way to the top. Okay, 1, 2, 3, 4, the fourth candle. There's a very strong bearish engulfing, right? And then price started going lower. All right, so on the daily, you start seeing this bearish engulfing. On the 4 hours, okay, on the 4 hours, you can zoom in to right at the top as well once more. And there is another bearish engulfing. Right, this 4 hours, the bearish engulfing much clearer. Okay, so this is actually how we cycle through the different time frames, and using when we identify the swing high and swing low, and then we confirm whether there's going to be a reversal, right? We can actually look for such clues, right? We can actually start looking for candlestick reversal patterns, single candlestick reversal patterns. We can look for double candlestick reversal patterns. Okay, and then of course we can try to look for double tops, double bottoms, all right, and inverse head and shoulders and regular head and shoulders. Okay, so let's move on to another pair. Let's look at dollar CAD. So over here, dollar CAD on the monthly, right? We actually see a very strong downtrend, and then there's a bullish engulfing. All right, but if you actually draw a box around this, of course, this level, there's a very nice reaction there. Why? Because this is actually 100% extension. 100% Fibonacci extension is also a graphical swing low, 1, 2, 3. Right, so the multiple confluence factors are lining up. Fibonacci, graphical, right? And then now let's look for chart reversal patterns in this area. Okay, so you go down to a weekly, try to see whether there are any reversal patterns here. Line chart, can't really tell. Let's go down to the daily. Looks like a triple bottom, right? Triple bottom right here. Triple bottom followed by a, look at that, bullish engulfing right at the bottom. Okay, we actually have a bullish engulfing right here. Okay, so triple bottom on the daily followed by a bullish engulfing. On the 4 hours, let's just try to see whether we can spot any other pattern as well. Okay, not very clear on the 4 hours, right, for this pattern. So let's go out to the daily. Okay, if assuming this is the triple bottom, right, a triple bottom, then we have a neckline. Okay, something like that, which was tested 1, 2, 3 times, right? And look at what I said, right? We want to wait for a breakout and a pullback to retest the neckline, followed by a confirmation pattern. Okay, so you have a breakout, a pullback, retest the neckline, followed by a confirmation pattern. We have a bullish engulfing candlestick right here. Okay, and this is actually the signal to tell you, hey, you know, for dollar CAD, right, at this point in time, it was really the best to go long, right? And of course, you can write it all the way to the top, right? And you can possibly even do a Fibonacci retracement to find your take profit. Okay, it's actually close to 78.6, but why price stopped here is because there's a graphical overlap resistance, right? This is a zone. Okay, you can see it better in close. All right, so unfortunately, we don't have enough time to do analysis on other charts right now. Okay, but I hope that whatever I shared with you guys today on candlestick patterns and chart reversal patterns and how to actually go through the time frames, we identify the swing high, swing lows, and then we try to wait for confirmation, formation, breakout, retest, and then confirmation of these patterns that will actually give us a bit more confidence and also help put probability on our side to play in line with the bigger picture. All right, so yeah, any last questions before I actually end this webinar? All right, you're welcome, Ben, you're welcome, Bertha and Daniel. All right, thanks so much for taking time out of your busy schedule to just join me here. So if there are no questions, clearly there will be no answers, but you guys are always free to give feedbacks, right, to support@fpmarkets.com, or if you guys have any other requests as to what topics you guys would like to have covered, please email support@fpmarkets.com as well. For all our upcoming webinars, okay, you can actually go to fpmarkets.com/trading-webinars/ and you should be able to register for all upcoming webinars that we have on FP. All right, so with that, you know, yeah, I just want to thank all of you once again for joining me today, right? I enjoyed myself. I hope whatever I shared today is able to value add to your trading journey as well. So thanks once again. Let me get your name right. Okay, this is okay. Yeah, Subramaniam, thanks a lot. Erastus, hope I pronounced it correctly, right? If I got it wrong, please forgive me. You're welcome. Anthony, you're welcome. You know, Erastus, yeah, I hope the takeaway that you have for today is a good one. All right, thanks, John. You're welcome as well, Dennis. Right, so everybody, trade safe. Have a great week ahead. Stay safe. I'll catch you guys again. Until the next time, take care.